Hi, my name is Chris Melnick and I'm a realtor in Halifax, Nova Scotia. Today, I'm going to talk about how property tax assessments and capped assessments work in the HRM, again, but in more detail with timelines and dates. From the previous video, we saw conceptually how things work. In this video, I'll bring those concepts into how things really work in the HRM. One of the most challenging parts of understanding how it works here are the different dates. So I'll explain this by looking at a timeline. First, we have our current year. It goes from January 1st to December 31st. This is the period of time that the 2023 assessment is used. The seemingly strange thing is that the 2023 assessment isn't supposed to be an estimate of what the home is worth for the beginning, middle, or end of 2023. It's actually supposed to be a measure of the market value on January 1st, 2022, the year prior. It does reflect the state of the property at the end of 2022, though. So if an addition was completed at the end of the year, the assessment would reflect that. Assessments are calculated at the end of the previous year and typically mailed out at the beginning of the year. And you're given until early to mid-February to appeal that assessment. I'll talk about that in my next video. If you are on a capped assessment, your assessment letter will have both your current assessment and your capped assessment if you're eligible. You would pay tax on whichever one is lower, which becomes your taxable assessment value. The vast majority of the time, the capped assessment is lower. Here is where things get confusing though. The property tax year is actually different from the assessment year. The property tax year is actually from April 1st to March 31st of the next year. When you pay the tax in two bills, there's the first or interim bill and the second or final bill. Property tax is paid in advance, meaning when you pay the first bill, you're paying the period from April 1st to about October 1st. Yet again, things get even more interesting. When you pay the first bill, the municipality doesn't actually yet know how much money they really need, and thus how much to charge you. That bill is an estimate. It even says so on the bill. This is because the municipality only figures out how much money they'll need in about August, right before the final bills are sent out. That's when they decide the tax rate. So how this works is that the first bill is an estimate based on the current, so 2023 assessment, and the previous year's tax rate, and then divides by 2 because you're paying for half the year. Then when August comes around and they know how much money they actually need for the year, they calculate that value, then deduct how much money you paid on the first bill to come up with the final bill. So if they did their estimate and then billed you $2,500 for the first bill, then figured out they really only need $4,800 for the year, they would be billing you $2,300 on the final bill. When you look at the timeline again, you'll see that you're paying tax from January to March based on the previous year's tax assessment. It almost begs the question, since the assessment itself was rather arbitrary, I mean, it's supposed to be a reflection of year-old values anyways, why didn't they just make the assessment period and tax period line up? I don't know, but that's the way it is. Next, we'll talk about capped assessments. If you've been on a capped assessment for years, everything's very straightforward. You just continue paying on that amount. But if you've just bought your home or thinking of buying, you may wonder when you'll be able to take advantage of this capped assessment. Now, here are the criteria to be on a capped assessment. In terms of timing while owning the home, you have to have one full non-capped assessment year before you can become capped. But because of the different tax and assessment periods, this gets a bit strange. So let's say you buy the home on June of 2023. Since you bought it in the middle of the 2023 assessment year, you have to wait until the 2024 assessment year for that to become your full uncapped assessment year. Then you'll have a capped 2025 assessment year. And remember, the tax year that incorporates the 2025 assessment starts April 1st, 2025. So if you buy a home in June of 2023, you would take advantage of your own capped assessment on April 1st, 2025, about 22 months later. But what happens in the meantime is an even more interesting thing. If you buy on June 1st, 2023, you're paying in between a property tax period. And since property tax is paid in advance, you have to repay the seller for those 4 months that they've already paid for. The lawyers would have handled this on closing. This is known as the property tax adjustment. The sellers could have been on a capped assessment or uncapped assessment, but either way, you're reimbursing them for what they've already paid. The second or final bill, though, is still based on that year's assessment when it was with the previous owner. So if they were on a capped assessment, your 2023 final bill will still be on their capped assessment. If they were uncapped, you'd be uncapped. The next full tax year, which is 2024-2025, would be all uncapped. Then the 25-26 year would be capped if you qualify. Now you may be wondering, well, what if I didn't buy in June and bought either before or after that? How does it affect when I'm finally on a capped assessment? Since you need to have one gap year of an uncapped assessment, you would need to buy towards the end of the year, right before the assessments are made, to have the shortest period of time between buying a home and having your capped assessment. For example, if you take possession in December of 2022, the 2023 assessment year would be uncapped. Then the 2024 assessment year would be capped, and you'd take advantage of your capped assessment for the April of 2024 tax bill. On the other hand, if you bought in January of 2023, the 2023 assessment had already been made. If the previous owner was on a capped assessment, well, that would be great. But if they were uncapped, that would mean you'd be paying uncapped property taxes on the entire 23-24 and 24-25 property tax years. As always, I hope you got some value from this video. Be sure to take a look at part 3 where I talk about other things you should think about in regards to tax bills and assessments when looking at homes and appealing assessments. My contact information is in the description. Goodbye.